Hi everyone, and thank you for tuning into my channel where I talk about stocks, the stock market, and investing. I post videos daily, so if this sounds like something you want to get more of, please subscribe down below. In today's video, I'm going to talk about the 3 best stocks to buy in September. Now, of course, I'm talking about when we're talking about buying stocks, we want to hold them for at least 3 years. So the stocks I'm going to mention here today, I'm recommending holding them for at least 3 years if you're going to buy them. All right, so let's get right into it. The first one is the Walt Disney Company, NYSE. Now, one of the main reasons to buy the Walt Disney Company is that the theme parks are absolutely crushing it. They're stronger now than they were before the outbreak, even though there's still so many capacity restrictions in place, and there is some of their parks are not allowed to open as long as they are. I'm thinking about their international theme parks. Despite those difficulties, the segment overall is ahead of where it was in 2019 with regards to revenue and operating profit. Okay, the next reason is that Disney's streaming services are doing really well also. They've surpassed Netflix with total subscriptions reaching 221 million in its most recent quarter. Netflix had 220 million. Now Netflix has just one service and Disney has Disney Plus, Hulu, and ESPN Plus, so it may not be an apples to apples comparison. Still, it's impressive that Disney's streaming services have surpassed the streaming pioneer, which has had more than a decade of a head start. Now, despite its improving prospects, Disney is trading at a price to sales of 2.5, which is near the lowest it's been in the last 5 years. You've hardly had an opportunity to buy Disney at the valuation that you're getting it today. That's one of the main reasons I like the stock here. Now, some of the catalysts that can lift it higher for the rest of 22 includes an acceleration of theme park revenue. International visitors have yet to come back to Disney's theme parks at a strong enough level. That's typically been about 20% of their business at the theme parks. So when that rebounds over the next 6 to 12 to 18 months perhaps, that's going to provide a further boost, okay? But that boom could start in the last 3 months of this year as the pandemic wanes and it eases off a little bit if they get fortunate in that regard. Another catalyst later this year is going to be 2 big box office films they're releasing. The second Black Panther film and the second Avatar film. Each of them earned 1 billion and 3 billion respectively for their first versions. And if their second versions or the sequels do relatively as well as the first versions do, that's going to be a big boost to Disney for the second half of the year, or the last quarter of the year, if you will. All right, so moving on. My second best stock to buy in September is Airbnb, NYSE ABNB. Revenue has been up at least 57% for 4 straight quarters. Consumers are unleashing pent up demand for travel. Remember, at the pandemic's onset, a lot of people canceled vacations, delayed trips, and so now that we're able to travel again, we're booking those trips and we're taking those vacations that we delayed at the earlier stages of the pandemic. So that's propelled Airbnb's trailing 12-month revenue to 7.4 billion, and operating income has also increased to 1.3 billion. So it's delivering consistent revenue and profit growth. Another interesting aspect for Airbnb, or another reason why I think Airbnb stock is going to do well over the next 3 years, is because global spending on hotels and resorts has yet to rebound to levels from before the outbreak. Before COVID-19 and the release of the outbreak of COVID-19, consumers spent 1.5 trillion on hotels and resorts in the year 2019. In 2022, that's estimated to just reach 1 trillion. So it will be 500 billion below the 2019 level. So I expect travelers to close that gap over the next 1 to 3 years. It may not rebound all at once in 2023, but over the next 1 to 3 to 4 years, it's going to reach that level and arguably surpass that level. Okay. Now, Airbnb trades at an inexpensive valuation at a price to free cash flow of 58. I should say relatively inexpensive valuation because it's near the lowest it has traded for according to this metric when it became free cash flow positive in 2021. So relative to its own historical valuation, it's inexpensive, and cash flow has been increasing, so it could get even more inexpensive according to this metric as cash flow increases. So if you were to buy it today, you would benefit from that trending of increasing cash flows and the rebound of hotel and travel spending. All right, moving on to my final pick, which is Chegg, NYSE CHGG. Now, if you're not a college student, you're probably not aware of Chegg stock. It's an education technology that is popular among college students and is most widely used by college students, somewhat by high school students as well, but it's most popular with college students. They have a strong competitive advantage with 84 million pieces of proprietary content. Chegg has built that content at the request of its subscribers, which are college students. So, as part of their subscription of between $15 per month or $20 per month, students get to ask 20 questions per month that are answered by Chegg's subject matter experts. These questions and answers then are up on the platform for all of subscribers to take advantage of and learn from. And so content that's created during one semester can be used by students for 5 to 10 years because the content remains relevant for the long term. If you can imagine, calculating derivatives in calculus has remained the same for centuries. So if there's a step-by-step solution for how to calculate derivatives, students from this year, next year, and the following year can all benefit from that solution. This content also acts as a low-cost acquisition tool. So if a student is having difficulty with their homeworks or with studying for the exam, they go to a search engine, they look up for help, and if Chegg has help on the content they're searching for, it pops up and the student can find Chegg and subscribe to Chegg. They get the help they need, Chegg gets a subscriber. It removes the need for Chegg to undertake expensive marketing campaigns because students come to them. Okay. Now, Chegg stock is down 81% off its highs, and that's because college enrollment has declined since the onset of the pandemic. So the student population has decreased since the onset of the pandemic. Students are taking a semester off, maybe taking a year off, taking a break, and not going to college because going to college during a pandemic can be even more challenging, and going to college is an already difficult task. Now, if you add a pandemic along with it, it makes it even more difficult. So it's understandable that students are deciding to maybe take a break, take a year off, or take a semester off before resuming their education. But that's going to be a short-term issue. Eventually, students need to return. Getting a college education is a highly desired goal in life, and that's going to be around for a long time. If you want to get a good job, you need to get a college degree. And so student enrollment should, I suspect, rebound over the next few years as the fears of contracting COVID-19 diminishes a little bit. Okay? And like the two stocks mentioned earlier, Chegg trades at a relatively inexpensive valuation at a price to free cash flow of 17.6. It's the lowest that it's traded for in the last 5 years. So there you go, 3 top stocks to buy in September. Let me know what you think down below, and if you like what you saw, please subscribe down below.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.